All righty. It's about a minute before 11 a.m. We are ready to rock and roll here with top trades. Enrique, if you're there, if you want to pop on, we can do a quick little audio check and get rocking and rolling here. All right. Well, we'll give it a second for Enrique to get up and running. I see the video. The video is all rainbow colored currently. So we'll wait for it to pop on. There we go. We're looking good now. Maybe this would be a pantomime situation.
I'm here.
Here we go. Enrique, good to see you, my friend.
You too. You too. I don't know that my pantomime's that good. I'm not sure how to pantomime gold, silver, interest
Charts.
rates.
We
You
just do
know.
charts and we do the cursor over them real aggressively. Uh,
Yeah.
awesome. Well, we'll give it a minute here. We've got some folks live on the call with us on YouTube. Go ahead, write in the comments, say hi. If you've got any questions, comments, want to say hi, tickers that you'd like us to cover, go ahead and do that now. We had to do a quick pivot. Gunner is not going to be on the call today. He's under the weather. His voice is not working properly. So he was on chat. He had a lot of stuff going on in the written word, but he won't be joining us on the call. But the good news is we've got plenty of stuff to cover. Enrique, we've got a bunch of questions for you just in general about what we're seeing in the market, and we'll pick your brain on some top trades for this week, and then anything else we see in the comments that come in there as well. So we might as well get kicked off here. I'll do our disclaimer. We should do our disclaimer every time, but nothing that me or Enrique talks about today should be considered personalized investment advice. And it goes without saying that anything that we're doing in investing comes with risk. That's par for the course there. If it was free money, that would be a whole different call. So this is investing and trading, and we know there's losers out there. So Enrique, let's talk, my friend. The markets, you were spot on. I haven't been on the calls with you. Gunner's been on for the last few weeks, but several weeks ago in your Truth and Trends write up and on these calls, you were waving your arms saying melt up. The melt up's coming. And since that point, the markets have been moving higher. Again, some of it's a little spotty here and there, but in general, we're hitting new highs. And a lot of the sectors you're looking at are popping up too. So would you want to kick off here and start with just sort of an update to your melt up thesis? I mean, it's
Yeah.
happening. Do you see it continuing? And let me know if you want
Well,
me to share my screen. I can pull charts up if you want, or if you want to
okay.
share, have at it.
Yeah, well, let me start here. I mean, look, I usually look at the stock market as a whole in a short term and intermediate term basis. I don't really think about the stock market in a long term, and I'll define the terms of each of those. I kind of like for the long term, I don't really care. Slash, I know it's going to go up through time. Like we got 100 years of that, and I'm confident with it. But short term, I call maybe 2 to 4 weeks, 2 to 6 weeks, and intermediate term, I call 3 to 12 months. And what got me so bulled up was a couple things. Number one, there have been so many historically rare breadth and thrust signals. So what are breadth and thrust signals? Breadth is the number of stocks that are going up, the number of groups, etc. What are thrust signals? Those are when you get certain degrees of breakout happen, like that you basically what we saw happen with the Russell back in July. And what I'm interested in the data is 90% of the time, 95% of the time, the data that the market's giving back to me isn't really very useful. It doesn't really tell me very much. But what I'm interested in is when the market does signals that have only been seen 5, 10, 20, 30 times in 30, 50, 60 years, that's something that gets my attention. And we have seen all year, just really since February, March, signal after signal after signal, some of the rarest signals I've seen in my career saying this market's going to be higher in a year. And we were still getting more of those in August and September. And this gets to my second point. Once we did that V recovery in August, I mean, just take a step back and remember the morning of August 5th and how freaked out people were. And everyone was saying it's all going to end. The yen carry trade, all this stuff. And we got out of that in 2 weeks. And that was sort of, I didn't really need confirmation for my breadth and thrust signals. Like I was confident in them, but that was like, oh, wow, like it's game on. And so as you're doing all that, we shook off what's happening in the Middle East. We shook off, multiple Trump assassination attempts. We've shaken off. There's 100 things that have happened. These huge storms, the Japan yen carry trade, all this. We just shaken it all off. And I've got this positive liquidity backdrop with the Fed cutting rates, GDP being solid, and going into the strongest seasonal period of the year. And so I was like, okay, the price equals truth. The trend is your friend. Don't fight it. And that's where we've been. Now I'm going to come with a huge but for today. Right. Let's put this in there. Is when you cycle through in the intermediate term trends, which are very strong now, and I think we're going to be higher 3 months, 6 months, and indeed 12 months from now. Once we get out to about 12 months, I've got some concerns, but that's maybe for another call. We do get to periods though where sentiment's just too extended, and I heard people have probably heard me use this analogy now, but I always talk about the boat, the raft going down the river, and there's 20 people on the raft, and all of a sudden, one side sunny, one side shady. We're going down the canyon, and everyone moves to the sunny side of the boat. But then what happens is if that raft just hits a little rock, the whole boat's going to go like this. And we're starting to see that a little bit, in my opinion, in the markets. And I'll tell you this, couple things, and people who read all the stuff that we write have heard some of these. But number one, we're very extended from the 50-day moving average. Number two, that CNN fear and greed indicator, which hasn't always been a good contrarian indicator, but recently has been showing extreme greed. It hit the highest level last week that it hit in 6 months. And number three, and this is a peculiar one, for our trading system, which is something that we're going to be introducing to folks here in the coming months, I actually have software that I've developed across the last 25 years that helps me screen for ideas and all that. I've got what we do with that software, and we can talk about this in more depth at another point. We're looking for stocks in an uptrend that then go below an RSI of 30 and back above. What we do is we have a watch list. We're waiting for stocks to go below 30. I had 0 stocks on that watch list as of last week. That's not happened. We've been running this software. I mean, that's very, very rare. What that tells me is I haven't changed any of my intermediate term views. I think there's a chance that the S&P, Bitcoin, silver, all these things could be 5-10% higher into year end. But right now, I don't want to step out and I don't want to step out and put a lot of risk out there. I want to wait for the fat pitches to come to me. And I've got a fat pitch today as an example that we'll talk about a trade, as a perfect example, what earnings season is serving up. So I guess what a long way of saying the melt up is on, the melt up is happening. Even in the melt up though, you're going to get periods where you just want to take a breath and wait for the market to come to you a little bit as opposed to chasing it. And I feel like that's where we are. And the market started to do that, with the price action the last couple, maybe the last 3 to 5 trading days.
Yeah. And that's what I like about what you're doing. It's similar to what Guenthner does too. You guys are very regimented. I like the fact that you've got indicators behind the scenes when, a lot of people are the CNN fear greed index is very indicative of just emotions. So right now, people might be overextending. They're like, oh my gosh, I'm going to go into even more options. I'm going to put more of my money in. But I like the way that you're coming at this. Like, we're in a melt up, but that doesn't mean getting crazy, getting ahead of your skis or anything of that nature. Because like you're saying, that the indicator that you're coming up with, that might mean that some stocks just aren't dipping below their RSI, which means they might just be overbought. So nothing's flagging on that indicator. Is that an appropriate way to say it?
There's a peculiar thing about strong intermediate term uptrends. Your best buying opportunity is buying the dip on that uptrend, right? Like that's when if you know you've got that setup behind you, you really want to, it's going to come to you. I guarantee it. Like the bottom's not going to fall out, and you can buy weakness and you can absolutely crush it in doing so. And so, I think it's funny because you could say you can buy breakouts and you can buy weakness. But in general, what I do with the overall market, because remember that will color things. I just, when sentiment gets too stretched, I'm just like, I'm less interested. So, this is the market where when you see weakness, you need to take advantage of it and be super aggressive. But when you're, to these stretch levels of sentiment, just wait for the pitch.
Yeah. Are there any charts you want me to pull up here? We had the S&P up here. I know you've been talking. This is similar. I'll pull up gold real quick. This is similar to what you've been saying because, at Paradigm, we've got Jim Rickards. I've been here almost 20 years. I love gold. Like, we get excited about gold and we're at an all-time high. So there's probably a lot of people that are in this little stair step. They're just getting excited. They're like, I got to buy more. But I do remember you saying about a week ago, you're like, well, I want to kind of, you're being a little hesitant here because maybe it needs a little pullback or something.
So I love gold. I think gold's going higher. I know I got accused of being anti-gold on the last call.
Yeah, you're in the wrong category. You don't say you love gold. They'll be like, "Oh, you hate gold."
Yeah, it's a strong intermediate term trend, but I like silver and Bitcoin more. I think they're all the same trade within and when I say all the same trade, look, they're very different, obviously. Gold is purely a monetary play, has virtually no industrial use. Silver is heavy on industrial use. Bitcoin is neither. But I think that what we are seeing, what I think is really interesting, and I've done this a long time, I've done this for 30 years. I do see creeping into the public discourse this idea about the deficits and monetary policy and all that, and I think it's powering gold. So, and I think it's going to power all three of these: gold, silver, and Bitcoin. But coming back to what I say about short term versus intermediate term trading, I like / love the intermediate term trend on all three of them. Gold's the least attractive to me because gold is sitting at, and I'm just pulling it up here on mine, sitting at an RSI of 74. And what I know through time is buying RSIs above 70 or above 80. It's a good 6-month strategy. It's generally a bad 6-week strategy. And what I like, but let's even go further than that. So it doesn't mean I'd short gold. Gold probably goes higher. But as I said on the last call, if I like gold here, then I love silver. And silver's beginning to do exactly that, because ultimately the drivers behind gold are many of the same drivers, certainly behind silver. And I think they're going to be the same behind Bitcoin. And I know I get a lot of pushback on that. But I definitely think that, it's just about the constituencies. Older people like gold, younger people like Bitcoin, period, end of story. And I think all of them are getting concerned about deficits and the BRICS meeting and all that. And I'm happy to go into much more detail about all that. I have opinions, some of which agree with Jim, and some of I'll say this. I'll say this about Jim Rickards. I actually agree with everything he says. Almost everything. Where we probably disagree is on timing. And I also am just focused on what the market is doing, not what it's going to do. Because I know as a trader, we're nimble enough. Take the market that you have, not the market that you want. Instead of predicting, prepare and react is kind of like what a trader's mindset is. Yeah. And so, but I look, all these are in great intermediate term trends. Silver, I know we're taking some profits today, but I think silver is, in a great position here. And again, that doesn't mean that gold doesn't go higher. It just means that I think there's more upside in both silver and Bitcoin, which I stick with what we said. Last week, we talked about Bitcoin 100,000. I mean, I'll tell you a couple. Can I go off on some Bitcoin stuff here real quick?
Yeah, hit me. I gotta see. Trading you took away my easy Bitcoin.
Did it?
Just be sitting here in my little menu and it's
okay. Well, that's that.
I don't know what they're doing. I don't know what they're doing.
Yeah, that looks the right chart.
I mean, CME futures. So
I'll share two things about Bitcoin. I was on a hike the other day and I was just thinking about Bitcoin, and gold growth, supply growth is 3%. Just so you know, 2.5%, 3%. Some people think it's 2, it's been between 2 and 3%. I don't know. Are you familiar? You're familiar with the rule of 72, right? Just divide by. Okay, so 72 divided by. That means that gold will double in either 36 years or 20 something years. Divide 72 by 3. I don't know that off the top of my head. Bitcoin has 7% left. That's it. That's all it has. So the funny thing to me about relative Bitcoin versus gold is if gold prices go to $10,000 an ounce, which would be, awesome, what do we think is going to happen to the supply of gold? Is supply growth going to stay the same or is it going to go higher? Well, I can guarantee you people are going to figure out how to get more gold out of the planet's crust. Yep. I'm real confident in that. So again, I don't say this is a bad thing for gold. I think gold goes much higher. But I look at Bitcoin with 7% supply upside and gold with 100% supply upside across a longer time frame. And I say, hey, and by the way, if you put Bitcoin at the same market cap as gold, where it is today, until maybe gold doubles from here, you would have Bitcoin at $974,000. So, when we talk about Bitcoin a million, I see no reason where in 20 years, 10 years, we can't have Bitcoin be as big as gold. And that gets me to Bitcoin a million. So, but again, these are just some of the thought process. What does that mean for today? What does it mean for trading? Well, it means for right now, I wouldn't be going super aggressive into gold trades. But if you want to be rotating into something, I like the silver breakout, and I like Bitcoin here.
Yeah. Yeah. And what he's saying, just to make sure everyone is on the same page, there's only the way that the Bitcoin, and I'm kind of a Bitcoin dummy, but I know this much at least. The way the Bitcoin code is written, right? There's only 7% of supply that's left to be mined. And that's what you hear about the Bitcoin halving. The halving is basically when you mine, you only get half of what you got before.
Yeah.
And the way that it looks out, there's only 7% of it left. As opposed to, like you said, and that's absolutely true in almost all resources, Enrique, but not with Bitcoin. If gold goes up, people are going to find more gold. They're going to have, that's how fracking was invented in the US. Oil went to $147 a barrel. And all of a sudden, people started finding oil in North Dakota and Texas and Colorado. And that's what happens.
And let me throw a couple other things out there just on this gold Bitcoin, because I'm looking at some of the comments and I'm happy.
They're probably, they're hammering you, dude. You got to.
No, that's okay. That's okay. Look, a couple things. First off, we talk about digital versus not digital. My understanding is that the digital amount of gold traded is something like 20 to 30 times the amount of actual physical gold that exists. So I got news for you. Gold is a digital asset. When I have the market cap that's being traded is 30 times the physical, that's a digital asset. People could take away your stock. That's just the same way they could Bitcoin. And, I always say this, gold's been popular for 3,500 years, but I'm going to tell you something about gold. It wasn't always the most popular. Silver was popular. There were other things that were used as currency. My point is gold has value because we all agree it has value. I think we're now at a moment in time, not because it's got any industrial use, it's got minimal industrial use, 10, 12% of supply of annual production. Bitcoin has value because we agree that it has value. And again, so mine isn't to make philosophical or judgment statements about the markets. Mine is to take what the markets give me and figure out how to make money off of it. And so what I'm telling you right now, I think gold goes higher. I think I don't love being aggressive into it here, but I think it's going to drag silver and Bitcoin higher with it. And I think that if you do get a Trump presidency, Bitcoin doesn't trade, when Bitcoin breaks out, and it's funny because someone said about silver, I made this point the other day, when these things break out, they don't break out with like 5% moves. They break out in stair-step functions, meaning if Bitcoin's going to break out here, it's not going to 75,000, it's going to 100. When silver, if silver follows through here, or when silver eventually follows through, because I think that's the better way to look at it. When silver eventually follows through, it's going to 40 or 50. So, I think that's what gets it. So I like all three. I just happen to, and this is what we talk about rotation and sort of optimizing your book. I think it's more optimal to be in silver and Bitcoin right now.
Yeah. And real quick, just from the paradigm standpoint, right? We had a meeting last week where Gunnar gave a call on Bitcoin. And again, just from, Fibonacci, which a lot of people follow, right? Just from Fibonacci's, you could see Bitcoin. This, when you say this out loud, it sounds outlandish. You could see it at 279,000 sometime in 2025. That was what Gunner was saying. And again, when you back it out, it's at 70 now. That's not a crazy multiple to go up to that. And then another person in-house at Paradigm was Alan Nuckman. He was looking at it short term. He's like, the way this chart's setting up and a simple, like the way that he sees markets and the way he prices in targets, he's like, we could see 90,000 by the end of the year. So we've got a lot of smart folks that know technicals, including yourself, Enrique. I just wanted to make sure I painted the picture at Paradigm. Like, it's not just a few people saying this, and it's not the Bitcoin, Bitcoin eye people. It's like,
Yeah.
this is a real looking chart that has a lot of technicals, and it's really respecting them well. And that's Bitcoin.
There's this concept they talk about, a Bitcoin maximalist who is like, Bitcoin's going to solve everything, and it's going to. I don't believe that. I don't care. Like, all I know is there's a significant amount of people out there, and a growing number of people that see Bitcoin as a store of value and a medium of exchange. And based on everything I see, that number is going to grow. By the way, I think the number is beginning to grow with gold also, with younger people and all that. And I know charts, and like, gold is leading these two. With silver and Bitcoin. And I think they could go a lot higher, especially into year end. Like, again, you get a Trump presidency, and Bitcoin could be 100,000, Bitcoin be 90,000 that week.
Yeah. All right, Enrique, where do you want to go from here? Do you have sectors, tickers, any trades you want me to pull up? What do you see shaping up? What's like a top trade idea for right now?
Let's do this. Actually, I want to stick with macro, and then we'll go to a trade, because you asked a question when we were talking earlier, and you were talking about the move in the bonds.
This is the big one. Let me pose it again so everyone can get caught up. We were in the green room. We have a Slack channel with me, Gunner, Ian, Enrique. And the thing that's bothering me as a market watcher, over the last few years, the 10-year note was a big, important thing. 10-year going above 4% broke the NASDAQ. Like, that was the concept. Now we're seeing this crazy thing. Rates got cut, but the 10-year rates are going up. And the 10-year is well over 4%, yet the NASDAQ is looking strong. So I was asking Enrique, he's really smart. He knows how all these things are connected. What's happening there? What is the bond market saying that equities are not agreeing with? And kind of in my dumb question, right? It's like, what's right? What's actually happening?
So one of the hardest things for people to wrap their head around is that 95% of the moves in the short term are just about positioning. They're about where people are on that boat, that raft going down the river. And it's hard because, number one, and I've been talking about this a lot, the media is not your friend, right? The media doesn't want to say to you, you know what, this move in the stock is really just happening because people were too enthusiastic. There's nothing really going on. It's just more enthusiastic sellers than buyers. That doesn't make a good headline. They want to say, oh, the China data came out poor, or this happened or that happened. But that's fitting news to price. As a trader, I'm focused on price. Price equals truth. And what you'll see is that 95% of the time, news follows price. It's not the other way around. And so to me, when I look at what's happening in the bond, I think, look, you had, as much as we say it's gone from, and I'm looking at the chart, from 3.6% to 4.2 of the yield on the 10-year. By the way, from April, it went from 4.6 to 3.6. It dropped a point. That's basically, in 5 months, it dropped, a full point, or in this case, that's actually 20%. That's a nice moving yield. We're going to come back to that in a second. And all we've done here recently is go back to where we were in the end of July. So, I think that the idea that these last few days that the move in the 10-year is causing stocks to sell off is just completely wrong. It has no understanding of the markets whatsoever. That is news that's being fit to the market price action. The market is selling off because there was too much enthusiasm. It was overbought. Too many people were on one side of the raft. It happens to coincide with a move in bonds from 3.6 to 4.2, but that's happenstance. That's not, it's not causality. And, the bigger point I'll make is that I don't really care whether bonds are at 3.8 or 4.4 or 3.62 or who cares? It's 40 basis points. It's not making any difference in the real economy. It's not making any difference to real people. I care if they're at 6 or 2, and this was a big thing. And this is proven out the entire time when rates were going up. Rates went from 0, the Fed funds rate went from 0 to 5. And I'm going to look at this chart of the 10-year. The chart of the 10-year, we bottomed at 54 basis points, 0.5% in August of 2020, and we topped out at 5% in October of a year ago, almost to the day. Actually, tomorrow will be the day that we topped out on rates. And the entire time we said, look, what matters, it matters the velocity, how quick rates are changing. But at the levels we're at, these absolute numbers don't really matter. If it were going from 0 to 15, like it did in the 80s, we'd be very interested. But the moment that we stop going up and we sort of settle in at this new amount, then the real world can adjust accordingly. So pull up the 5-year chart on this, actually, because you'll see it. Do you know when the bond for the 10-year first kind of stopped out in this range? In October of 2022, you can see it right where you have that line. And lo and behold, go right. You see this? So I'm pointing to the screen. The top line that you have there, go a little bit further, right there. That's October 22nd. Is that
right? Yeah, on. That's right.
That's literally 2 years ago. So my point was the entire time, and I was writing about it the entire time, I said, unless the bond is going to 10%, I don't really care. Corporations don't really care whether it's at 2 or 4. They care when it goes from 0 to 5 in a straight line. But once it stops going up, the real world can adjust. And lo and behold, the market bottomed right at the point that the bond stopped going up. And lo and behold, a year later, when we had the first real test of this bull market, the market bottomed again. So I don't really care. I at this point, I'm looking at this range here. I'm looking at my chart between 3.5 and 5. It don't make any difference to me. I don't think it makes any difference to anyone. Yeah. It doesn't really make any difference to anyone in the real world. And look, I understand, credit cards and mortgages and all that. But honestly, is a 7.1% mortgage that different than a 6.4% mortgage? It's not. And that's what you're going to see with the bond going between 3.5 and 5. So, look, if this went from 3.6 to 5 in another month, yeah, that'll probably shake some things up. But people have already adjusted to these levels. The real problem, and if you go back further, I don't know if you can pull a 10-year chart on that. Go all the way back to 2011. The real problem was that 10-year had settled in at that 1 to 3 range for a decade, and we finally broke out of that. So again, I'll go to the point I'm trying to make here. High rates, which I would consider high single digits, are a problem for the economy. If we're putzing around between 0 and 5, it doesn't really make any difference. The only difference that it makes is the velocity by which we get there. If we move really quick, that can cause real world disruptions and cause disruptions in financial markets. So,
all right. Yeah, that makes sense. Again, I'm probably a lot in the Rickards camp in the thinking of the less of a trading sense. And even though the question I posed was more in the trading sense, it's more of like thinking, if we last like this for an extra year or two, which again, I know that's not really the way you think of things, is you're more of a trading mindset. But I think of it like if we last another year or two, like banks are going to start having problems, small businesses having problems.
If we last
can't refinance, like all that.
If we last at 4.2% where we've been for the last 3 years.
Yeah, I think it sucks the air out, dude. I'm a conspiracy guy.
But here's my point. We've already been here. Like how many banks went bankrupt last year?
I mean, you don't know it.
Well, but people adjust. We've had plenty of time to adjust. So, we'll see. There were 6 banks that went out of business last year. There've been, I think, 2 or 3 this year. So, and I'll say one last thing on that, is that what people forget with the banks and commercial real estate and all that is the banks don't want to go out of business. The government doesn't want them to go out of business. The consumers don't want to go out of business. The lenders to the banks don't want them to go out of business. Literally, no one wants them to go out of business. So functionally, they don't go out of business very often. I mean, that's unless they absolutely have to. And I just and we've been there obviously in the global financial crisis, but I just don't see it. And look, as a trader, if we do, we're going to make a ton of money off of it because there's going to be all kinds of unwinds and all that. But right now, it gets back to we're in a good stable environment for trading and taking advantage. So should I give you the trade that I was gonna talk about?
Yeah.
Okay.
This is top trades after all, not my conspiracy theory.
Yeah, exactly. Macro, Enrique's macro BS and Matt's conspiracy theories.
Yeah.
That'll be another call. We'll get Rickards involved in that one.
That's paid. You have to pay to get onto that super call.
Yeah, exactly. Some people might pay to not be on it, but the stock I want to talk about today is Cigna. And Cigna is one of the largest health insurance companies in the country, and you can pull up the chart here. And Cigna is a perfect example of what I'm saying to wait for in the stock market. Okay, so I'm sure all of you have seen that Humana, United Health, like a bunch of the HMOs and healthcare companies have been hit really hard in the initial wave of earnings season here. And when you dig into each of those situations, they're all kind of company specific. One of them priced their Medicare programs too expensive. Another one screwed up drug pricing, all these different things. But what I love about earnings season, okay, and again, I've been talking about this a lot as we go into earnings season. As an investor, so I got two hats, trading and investing. As an investor, my goal is to own things for 2, 3, 4, 5 years that I think can double, triple, quintuple, go up tenfold. The challenging thing about earnings season is you get 4 times a year this little period of noise, and then stocks move like a fulcrum right around it, and it doesn't really probably change the long-term outlook, but people freak out for the moment. As an investor, that's very frustrating. As a trader, that's nirvana. Because what you can do is you can find the freakouts. So, I'm going to give you a very simple thing on Cigna, because Cigna, look at that 5-year chart. The stock is in a very nice uptrend. It's a very, very pretty chart. If you look at the RSI, Cigna just today went below an RSI of 30. But unlike, and this is where, in the future, we'll pull up some of my charts too. Unlike its healthcare competitors, Cigna has had very consistent earnings growth. I'm gonna just read off the last. This is amazing. I'm gonna go since 2016. EPS growth has been 29%, 36%, 20%, 8%, 11%, 14%, 8%. They're going to do 14% this year. So Cigna has executed very well. And furthermore, Cigna, when you look at the earnings reports, they've actually beat. I'm looking at data that goes back 10 years. They've only missed 4 quarters in 10 years. The last one they missed was during the COVID period. And what all that adds up to is when you look at the earnings revisions, which is the thing that I really focus on, is the best short term. And just so everyone knows what an earnings revision is, there are, for instance, with Cigna, I'm just going to give you this. Cigna has, hold on. Cigna has 24 analysts that cover the stock, okay? Has 20 buys and 4 holds. Not that I find that very valuable. Every one of those analysts has an estimate for the quarters and the years. Through time, you can look how those estimates move. They can move up, they can move down. A great example, and we published this, I actually think, in Truth and Trends the other day. If you look at Meta, they've had very positive revisions. You look at Tesla, they've had very negative revisions. That's why Meta has gone up and Tesla's not done anything. Cigna has had very consistent earnings revisions, positive. So what's happened here is you take a great company with a great growth track record that's been executing, that's got positive revisions, and the stock just achieved a material oversold level below that 30 RSI. And I'm going to pull up one thing. We're doing some analysis here, real time, by the way. I'm going to pull up one other thing. What we can do is we can actually go back and look at when the stock has traded. I don't know what this is going to say. This is not the be all end all, but we can go back and look at when the stock has traded below this 30 RSI. Let me just do this real quick. This has happened roughly 20 times in the last 10 years, and the stock is higher 60, 70% of the time in 90 days. So, this is what you want to look for in earnings season for trades is you want to look, this is, I guess you call it a baby with the bathwater, right? Is the Cigna babies being thrown out with the Humana United Healthcare bathwater. And, look, this isn't the highest return trade. If this were to trade back to its high, it's up 15%, but it's also about high certainty. And this is something that you could wrap options around. You could sell puts, you could buy calls, you could just buy the stock. But this is the exact kind of trade that I wait for earnings season. And we've done about 100 companies of the S&P 500. We're going to get another half a dozen, maybe even more of these in the next 3 weeks as we get through the other 400 companies in the S&P 500. So, but this is a classic setup trade.
Yeah. Can you explain your mindset or sort of how you pulled those numbers? Because you're saying, oh, it's a 67% chance of doing what it did in 90 days. Where did you pull those numbers? How does that
I literally our own proprietary software and system where we go back. So everything I quote is data. So we just go back and look at every time the stock's traded below 30 RSI in the last 10 years, and then what it did 10, 30, and 90 trading days later. And then we just look at what happens there. And there's something, we wrote about this the other day, and I'll talk about this a lot. There's this, there's this disclaimer in finance: past performance is no indicator of future performance. It's 100% wrong. Past performance is your best indicator of future performance. Okay. And I use the analogy of like a sports team. If I've got, if a sports team is 8-0, a football team, it's because you got good talent, you got good coaching, you got good execution. If a stock, for the vast majority of stocks, is up 100% and has beaten 20 of the last 22 quarters or 20 of the last 20 quarters, it's because we got a good company and we got good products and we got good competitive moats and we got good management. And so, yes, that can change, but more than often it doesn't. Things trend, like life trends, like, especially financial assets trend. So, we play probabilities. If I get stuff that says across the last 10 years, I got an 80 to 90% probability that's going to happen again, I love that. We'll do it. We'll take that bet every time. And then you manage the risk on the ones, the 10, 20% that you're going to lose. But if you got 75, 80% hit rates, man, it's hard to lose money when you're playing with those kinds of hit rates. And that's what the market serves up to us with trades like Cigna.
Yeah, that's very well said. And again, a lot of times we use the past performance as an indicative of future results I think they use it. It's more of a disclaimer if you're selling something, right? Like if we have newsletters, we can have a portfolio that's great, but we have to say like, hey, we can't guarantee anything to the future. But what you're saying just about stock analysis and the DNA of a company is absolutely true. That's called a trend, right? Like that's just what's happening. So it's very well said.
For a stock to go up 5-fold or 10-fold, it has to double or triple first. So, one of my rules in investing is if you're looking for stocks that are going to go up 10-fold, start with stocks that have doubled. Some people are saying, well, I look at stocks that are at their lows or been cut in half. Well, if I'm looking for things to short, I start with stocks that have been cut in half, because most likely they didn't get cut in half by accident. They got cut in half because there's something wrong. And now there's plenty of great value positions. But again, for trading, we're kind of combining all of these, right? So here we have a great company. It's gotten taken down. We got a nice tape behind us. You can really lever into trades like this. And, this is what we're focused on.
All right, Enrique, you have any other topics or you want curveballs?
Throw me curveballs, and anyone want me to talk about any individual stocks? I love to do it.
Yeah, I can't pull it up right now, but I'll see if we can pull some tickers from that. But just one curveball is just your thoughts. We are now dangerously close to the election. Any thoughts? We're seeing a bunch of news articles, right? They're saying, oh, the market's pricing in, Wall Street thinks Trump's going to win, that kind of thing. How do you, as a professional and a data run, mindset, how do you think about the election? How are you, either investing, trading around it? Talk to us a little bit about that.
Well, look, as a trader, I go back to what I said before. Fundamentally, I don't think the election is going to have a big swing one way or the other. I'm gonna get to something that Rickard's just published in a second, though. What I will say is this: with the tape very extended from the 50-day moving average and sentiment having moved very much one way, I think there's a greater chance that election noise can cause volatility. But I'm telling you, that's news following price, right? The issue in the market is not the election. The issue in the market is one-way sentiment and stretched technical levels. That will then all it needs is a spark to cause a sell-off. And that spark, given where we are in the calendar, very well could be the election. Now, what I do think is interesting, I don't, Rickards published just, I think, literally before we got on this call, the idea that we may go to a disputed outcome on the election. Look, I think both parties have disputed the other parties winning an election. So that seems like a very logical assumption. That could throw a real curveball into that intermediate term trend. It will not change it. But, the one thing I'll say is that it's very normal for the stock market as a whole to go through deeper 6-week, 8-week corrections. That's what we saw. If you go back to last year, from July to October, we saw a really big steep correction where we tested the 200-day moving average. I'm going to tell you one of those is coming. Okay. At some point, we've now been, I can just look at the math. We literally have been 1 year since we've touched the 200-day moving average on the S&P 500. Sometime in the next 6 months, we're going to test that again. And what could be the catalyst for that? I don't know. A hung election. I think this one will be different than Bush Gore, but I think that also, if you remember with Bush Gore, that happened, that actually happened during the collapse of the internet bubble. So that was a crazy time. But yeah, so I think that you could see, if you get that outcome, it's close and both parties challenge it. I think you could begin to see a correction going into the 200-day. And also, we flew right through the seasonality of September, October. Maybe you fly right opposite to the seasonality of November, December, given that. I think it's low probability. But how do we deal with it? You're tactical. Be quick on your feet, especially as a trader.
Awesome. All right, why don't we, and I appreciate that. Again, we get caught up in these things, so it's good to hear a very regimented way of thinking about the election coming up, because emotions are going to be flying one way or the other, and people probably be freaking out no matter what. So let's, I pulled up Hood here. These are just, I'm going through some tickers that were in the chat. I know that the trading desk has an active position, I believe, on this. I think they closed out the silver position today for a big winner.
Yep.
So it's been a choppy market, but Gunner's been doing well and just keeping things afloat. It's a little bit more of like a, stay afloat type market for some of these swing trades. But Hood's been looking really good. Again, whether that's getting a little crypto wind at its back or what. Let's see.
I love Hood. I love Hood. It's with the move that it's had going into earnings on October 30th. I wouldn't be surprised to see it trade off on those earnings. But again, that has less to do with what they report and more to do with the stock. I gotta reverse it when I'm on the camera. The stock going like this. But I'll tell you what, if I'm right about Bitcoin, Hood goes a lot higher. And, all the new products they're introducing, Hood is a fascinating long-term story. So, this is one that I think you should take some profits, especially as we go into earnings, but sets up very nicely.
Yeah. And I would bet, again, this is just harnessing my inner gunner. He does not like holding options through earnings anyway. So October 30th is coming up. That might just be somewhere trying to maximize the
I'll tell you, having an RS, having the stock be so overbought in a volatile name like this too is a nasty cocktail to go into earnings. Yeah. So speaking of which, one you can pull up here, Tesla obviously reports tomorrow. Look, I've got very simple rules. A body in motion stays in motion. Tesla has missed or seen negative revisions pretty much every quarter for the last 6 quarters. Literally the last 4 quarters, I'm just looking at EPS. I probably can look at EBITDA, but EPS, they missed by 14, 13, 3, -10. I don't see why that's going to change. So I struggle to see Tesla tomorrow. If they've been missing numbers, I haven't seen them raising prices. I haven't seen auto sales doing better. I don't understand why it's going to do any better. So that's one that I wouldn't be surprised to see down, 5-10% tomorrow. Again, this one trades in chunks, but part of that is if Tesla were back at 140, I almost don't care what they're going to report. but it's not. The stock is up, from that 140 bottom in April, the stock's almost a double, and we're still burning off the robo-taxi stuff. So again, hopefully there's a theme that people are getting here. A lot of this is just about positioning of where things are in these sort of waves, and understanding that. So
yeah, let's see. Let me pull up. I don't even know what is it's manpower. This was another one from the chat. That one looks like it's a trainer.
Let me take a look. I haven't looked at Manpower for years. This is the staffing company.
Yeah.
Look, I hadn't seen the sell off
on
the
right side of the chart.
Yeah. Look, I'll tell you the first thing I do, and people are beginning to, as we roll out my stuff, people will learn the language that I speak. I look at the earnings revisions, and the earnings revisions here are just terrible. Is 2 years ago, people thought Manpower for this year was going to earn $11. Now they think they're going to earn 450, 460, 455. Yeah. So I got to tell you. So if I were, and again, this is maybe where I'll take over next one of these weeks. If I were to throw the earnings revisions chart on that price chart, they are identical. And this is my point. If you want to understand where stocks are going to go in the short term, you need to look at the earnings revisions. Okay. Now that data is very difficult to get. We get it from Bloomberg. This is why you guys are talking to us. And the other rule is, or the other law of the universe is, negative revisions are negative revisions until they stop, and positive revisions are positive revisions until they stop. These are long-term trends. So I would not, Manpower probably bounces. It's a real company. It's very oversold, but I wouldn't touch it here.
Yeah. All right, let's keep going. SoundHound, this is one that's active in the trading desk. We go to a 1 year. Interesting looking chart here. You had the huge AI run up. And again, this isn't AI, SoundHound AI. It's I think they're more sort of audio based.
I like this one. It's a classic Gunner breakout. The key to this is, and Gunner said this too, here you're buying less of a company and more of a thematic trading vehicle. I mean, obviously what the company reports will make a difference. I love the pattern, the pattern that he was looking at here. You've got rising moving averages across the board. You're teasing a breakout. I think into year end, you can see a lot of these breakout, between now and then. So this one's good. I keep a tight stop on underneath it, which is exactly what Gunner does. But I love the setup here. And that's the funny thing about this market is we actually have quite a bit of diversity in setups. You've got some stuff that's really overbought, some stuff that's really oversold. You got a bunch of these speculative charts that have been moving around, that have built these big bases that look like they could break out. I'm waiting for the opportunities, and we're going to be in a super target rich environment, but there's a lot of diversity in terms of the types of charts that are out there.
Yeah. I like the story on SoundHound, so we'll see. I mean, that's the earnings don't look too great, but we'll see if it can pull itself out. The other one, we've got which is Unity Software. We'll see what they're doing. I mean, anything you see on Unity?
Yeah, it's the same chart. It's the same chart. It's one of these recovery speculative bounce names. Now the challenge with Unity that you have a little bit more is this one will be a little bit more earnings oriented. But if I recall correctly, this is versus Sound, because Sound no one's really paying attention to the earnings numbers on Sound. If you look at Unity, their earnings have been basically stable. So let's compare that to Manpower. Like if I look at the EPS numbers, they've basically stable. EBITDA numbers have come down most of this year. That's why the stock is down. But it's really going to come down to. But I like as a trade, I like the breakout setup that Gunner has identified. One other thing I'll say about Sound, Unity, and this is to a certain extent what we were talking about with silver and Bitcoin before. If these break out, they're not. Unity's not going to 2023. Unity's going to 26, 27, 28. And that's what's really nice. You sort of have a what I call an asymmetrical risk reward on some of these.
Yeah, it was the same thing with Sound. That's one of the reasons that I like it, just as again, not anything technically, but just the way people look at charts and they're like, I want to get into AI and SoundHound. Somehow they hear about it. They're going to pull that full chart and they're going to see SoundHound at $10. And
Yeah,
they're going to see it's
it's
at
a
$5 now. It could be at 10. That can get buyers in. And it's the same thing here. This is 1 year ago. Unity was at
and
42 bucks.
what
You
I
get some
love
buyers
about
in.
Sound, what I love about Sound too, is it's traded above this $5, $4 or $5 level now for the better part of the year. There's a lot of people who own this stock.
Yeah.
The vast majority of the owners of this stock, I mean, you can tell you, I'll tell you, because this is the great thing about moving averages. Over the previous 200 trading days, which is just about 9.5 months, the average owner of the stock owns it at $4.57. How do I know that? Because that's the 200-day moving average. So that's literally mathematically, there's a ton of people that own it at 457. So I think that there's a lot of support around there, and it's just a really nice base getting ready to break out. Whether it does or not, we find out, but you want to put yourself in front of that to have the opportunity to take advantage of it.
Yep. All right. Let me look at a couple other tickets. We got TLT, which is back in the world of bonds. The old TLT.
I'd fade this move. Meaning I would go long TLT and fade the rates move. I love on macro stuff, whether we're talking about rates or metals or things like that, when they get really, really oversold or really overbought, they revert. The joke that I make is like oil ain't going bankrupt. People might think the United States government's going bankrupt someday, but it ain't going bankrupt next week or next month or next year. So I actually like that for a bounce here. But you're not really playing for much, in my opinion, is the problem I have with TLT.
I agree. TLT is a little.
And I'll say one other thing about that. We've been talking about on these calls, in your trading book right now, in your trading or investing book, you really don't need more than a dozen names, maybe even a half a dozen names. Have awesome names. And what makes an awesome name? There's two things, because it's sort of it can be is probability and upside. So something where there's a 90% likelihood you're going to make money but not make a lot of money is actually still a great trade. Something where you can make a lot of money but there's only a 50 or 60% is also a great trade. You want to kind of times the two probability by return when you're looking at that, but be selective. We're going to be talking in a year at some point in the next 2 years. We're going to be talking about this market right here, and we're going to be saying, damn, do you remember when we could do all these things and it was so easy and there were so many, because this happens. There are times when it's easy and you can stretch your legs and you can be aggressive. And there's times when you're going to want to turtle, and you're going to focus on preserving capital. We do very well during those in counter punching and making money, but this is the time to take advantage.
All right, let's pull up another one. IWM, that's small caps.
Yeah, what's interesting about IWM, I actually love this chart. What's happened for IWM here. I mean, I'll go back to what I had said before. I'll say a couple things. First off, I generally don't care about small caps. They make up 6% of the total market capitalization of the market. Apple is bigger than the entire market cap is bigger than the entire Russell 2000. Apple's net income, just their net income, is bigger than the net income of all these companies combined. So to me, the Russell 2000's like Apple, it's one big Apple. That being said, that breadth thrust that we saw back in July was historic. And now we're building. I mean, look, you got rising 200, rising 100, rising 50. We got higher lows. We're testing the highs here. It's selling off a little bit the last couple of days because of interest rates, and these are more interest rate sensitive. But that's, and when this thing goes, like I've got one great chart I meant to post on social that shows the outperformance of the Russell 2000 versus the S&P 500. Historically, across the last 60 years, 70% of the time, the Russell 2000 has been in an outperformance situation versus the S&P 500. It's now at an underperformance across the trailing 12 or 36 months. I forget. I think it'll go back to trend. So I really like the setup here on this. That chart's much better than I recall. I hadn't looked at this recently. That is a beautiful chart.
This is where Gunner, again, I kicked myself in retrospect, but I should listen to Gunner more. He gave a presentation last year around November. And I just remember it because he pulled this stat, and I'm gonna butcher the stat, so I'm not gonna say it, but he's like, hey, it was like 23 out of 24 times when the Russell did this little thing, it was up year over year, and the average was 25%. And this
So
is almost textbook. We're going to get into it right around here. Would have been like start at 170. We're not at 25 yet, but like if this thing ends up around 230 or something, like that textbook, that's
that
just the 24th out of 25 times now. It
that
just,
was a breath thrust. I remember it, and that's what. Remember when we started this call. The first thing I started with is we have seen a record number of breadth thrusts in the market in the S&P 500. We've now begun seeing in the Russell. Yeah, I mean, and when the Russell goes, and I'll put this as one more theme. We can talk about it with Bitcoin, with silver, with gold, the S&P 500 in a bull market, the IWM. When these things go, these are multi-year cycles, and they don't go up 20, 30, 40%. They go up 100. The average S&P 500 bull market's 3.5 years and 125%. We're 2 years in and at 67 today. So intermediate term, I'm quite bullish. In the near term, stay on your feet.
yep. Yeah, it's up 30 some percent year over year, and we'll see what happens. Other one was Lunar, which I think this is a space stock. This one's a little willy-nilly, but I guess the space stocks are getting ASTS, the space stocks are getting some love. After, hey, we can say Elon, at least after whatever his robo-taxi event was, kind of a dud. I thought it was gonna be great. It was a dud. But then the next, couple days later, he's like, why don't I catch a rocket? So people are still interested in space. Do you know anything about Lunar Intuitive Machines? I don't know much about this one.
I've never looked at the stock. I don't know it. I'll take a look a bit. $1 billion market cap. I mean, I'll tell you on the chart, it just looks like you're very prototypical. Look, to be honest, I got something for you. Compare this to the chart of SOUN, Soundhound.
No, I can't. No, you mean like actually put them together? I can't.
No. But what I'm going to tell you,
Yeah.
I know. But what I'm going to tell you is this chart looks like the chart for LUNR looks like Soundhound, except it broke out. Lunar broke out from 6 to 825, and that's what sound. See right there. So if you pull that chart, can you pull it back so we only see it? It cuts it off in the beginning of in mid September when I had that. Right there, you go. There's the Soundhound chart. It's the exact same chart. So this is how the small cap speculative names work. Boom. There you go.
Look at that. All right.
And so that's what you want to put yourself in front of. So, all of the things held equal, and I know nothing about either stock, but from the chart, I'd rather own Sound than I would Lunar.
Yep. I agree. We always joke about the sort of my macro view on things. But I mean, Sound is just it's in the right spot. It's in the AI spot. It's in the like sort of dictation space, which is a really, I think that's where cell phones are going. We're just going to be able to talk to them. We don't have to look at them. Sound seems to be in that space. They've got a good ticker, good name of the company. So,
well, and more equally importantly, it's got a good chart. Because remember,
it might be way more important, but yes.
Yeah. Well, and here's the thing. People, when I say that, they're like, oh my God, that's voodoo. No, the chart is stocks are products with supply and demand. Okay. And I don't know how popular the product is, like how many people are agreeing with your thesis, disagreeing with your thesis. I have no way of measuring that through some survey, et cetera, except I have the price of the stock. And that is exactly the measure of supply and demand. Price equals truth. Accept the truth, identify the patterns, identify the replicatable high probability situations, and execute to those. And that's how you make money as a trader.
Awesome. All right, Enrique, I delayed this for 57 minutes. What do you see happening in the World Series? This is for everyone at home, this is a Yankees fan here. This is a big Yankees fan, all right? What do you see happening?
Yeah, well, for full disclosure, I'm actually headed to Game 2 in LA on Saturday. I'll be at Game 5. Oh man, I don't know. I'm gonna go Yankees. I'm just gonna tell you the Dodgers are starting pitching so beat up, and God forbid if Judge actually can start to rake. I mean, Soto and Stanton. I'm a homer anyways, so I'll go Yankees in 6. So.
As an onlooker, a sad Orioles fan, we haven't won a playoff game in 11 games, I think, so we're horrible. I will say it is nice to see this sort of coast to coast situation. The Yankees
You
are
know,
real good. You've got Shohei on the Dodgers. So if you're not interested and you haven't been paying attention to baseball World Series, I think this thing's setting up pretty cool. You go coast to coast and you get some action going. So we'll see.
I'll
And
say that one.
Enrique will be there. Catch
Yeah,
catch some.
I'll tell you this one thing too. As much as people like want to hate on the Yankees and Dodgers, last year was great. I'm also a Diamondbacks fan because I'm from Arizona. Uh, they didn't exist when I lived in Arizona, but you had Diamondbacks Rangers, and it was cool because there were these two little teams. Now you got the Giants, meaning the Colossus
The
going
big
against
ones.
each other.
Yep.
I know just one quick thing because a lot of people have been asking about Novo Nordisk. We mentioned last week, still like Novo. The chart, look, it's the same thing. You've got an uptrend. You're going into the company's been beating numbers. The only thing that gives me a little bit of pause is the last couple quarters Novo or last quarter Novo had some noise around it. But to me, Novo is a good high probability bet. But I'll leave with this one last thing is, we can never know for sure. We never have certainty. And if you do, it's probably illegal. Okay. What you want to do is you want to put yourself in front of enough 70, 80, 90% probability bets and manage when you lose and optimize when you win. And that's so where does Novo Nordisk? Novo Nordisk, uptrend, beating numbers, great theme, winner. It's struggled a little bit here. It's got it oversold. I think it's a high probability bet. Just be ready to move on if we're wrong.
Awesome. Enrique, I appreciate the insight as always. I think everyone at home feels the same way. For everybody in the comments, we appreciate you. You guys are throwing in great tickers, great commentary. So we appreciate it. Everyone, that's it for Top Trades for today. We'll be back on next Tuesday. Oh, only one Tuesday left before. I mean, the election Tuesday, it's probably going to be a dud in the market because no one will know anything. But we'll be back next Tuesday. We could talk maybe a little election action. We'll see. Enrique, thanks a lot. That was an enjoyable call. Appreciate it.
Absolutely.